So let's bring in Komal, Sri-Kumar, president of Sri-Kumar Global Strategies. Welcome. Good to have you back with us. What did you hear that the market doesn't seem to be hearing, or what is your intuition that tells you that the Fed fund rate is going to move lower sooner?
Good to be with you, Tyler. In terms of my expectation for the interest rates moving down, there are three major factors. One is, if you look at what has happened yesterday from before the Powell's press conference, and then going on to the conflicting statements that were made by Chairman Powell and the Secretary Yellen at different conferences, come over to today. What has happened? The entire yield curve has shifted downward. 2-year, 10-year, 30-year, they've all moved down. And I think the downward shift of the yield curve is going to continue. That in turn means that irrespective of where you are on the yield curve in terms of your investment, you're going to get a capital gain if you wait long enough. Second, I think we are heading toward a recession, and the recession seems even more likely after the recent developments on the interest rate policy and what I call the total mismanagement of monetary expansion during 2021, early 2022, when the balance sheet was doubled, even as zero interest rates were kept despite an economic recovery. So that is also going to cause a recession, going to bring yields down. And third, you have a banking crisis. Surprise, surprise. With this kind of economic management, why would there be a crisis? And there is, and the banking crisis is inherently disinflationary. That's the third major reason, Tyler, I look for lower yields and more gains in the fixed income market.
There are some people, I think, who would say that the banking crisis is inflationary, not disinflationary, because there have had to be sort of credit backstops put in place, liquidity sent into the system. How do you answer that?
That's a great point. Yes, liquidity is going to be injected into the system. The question is, that is the inflow of liquidity, and how does that compete with the fall off in aggregate demand that is coming on the other side? Banks are going to be unwilling to lend. And Dom talked to us just a few minutes ago on your program, Tyler, talking about how regional bank stocks are again taking a hit. So if you are a small, medium-sized company depending on that bank for a loan to be extended to you, you're going to be disappointed. And that is disinflationary, irrespective of the backstops that the Fed and Treasury are providing.
The credit tightening, the unwillingness, maybe it's too strong a word, to make fresh loans is going to be disinflationary. Contessa?
That's very well put, yes.